Good afternoon. This is Todd Colvin coming to you from the floor of the CME Group. We are talking equities and E-mini S&Ps. After a brief downtick, it actually looked pretty ugly yesterday, all things considered. Most of the downticks we've seen in the E-minis and equities altogether have been very short-lived. This was no different, but we bounced. We bounced pretty strong today. We had strong earnings, we had good bank earnings, a lot of forward guidance that looked positive, and much of the earnings announcements, whether it be from the banks or from the manufacturers or the technology, have all come on the heels of tax reform providing more benefits to corporations than maybe was previously thought. And I think that has really been the underlying tone on the forward guidance, because in the equity markets, it's not only what have you done for me lately, but what will you do for me? And that's when we take the picture and we look forward and we say, where are we going to generate those new revenues from? And obviously saving money, not paying Uncle Sam as much, is one way to do it. And I think that's one of the reasons why we're seeing this sort of explosive move in equities north of 2,800 in the E-mini S&P. So every day we kind of look over our shoulder and we look at the old high. Today is no different. So equities extending higher on a lot of earnings and tax reform. Secondly, let's look at volatility. Now, yesterday there was a concerned buyer of VIX calls, bought the February expiry, 19 calls. Don't forget, 19 is the level in the VIX that hasn't traded since, you got to go back to the 2016 election. So it's been a while, and we haven't really seen the market get any sort of excitement or fear priced into it, really, since the bounce in equities off the election lows. And someone came in and bought close to 150,000 of these calls yesterday. Now, that's a pretty big position, whether you're protecting a portfolio or whether you're making a speculative move here. It seems that there was someone that had concern, and the market really read. The VIX got as high as it has really since in the last few months. It really, it hasn't really excelled all that much. We've spent a lot of time below 10 in the VIX, and anytime we get above it, we talk about it being a breakout move. Well, this wasn't really it. The market sustained these upper levels for about 2 days, and then as equities today started making new highs, the VIX fell off and we're back below 12. So it's really not a sustained move that we had thought we might get, based on the fact that I think that the equity indices themselves continue to outperform. So right now the VIX index still higher than it was a few days ago, but not as high as it was, and looks like it's going to be trending back down to that number 10. And one other thing about the VIX, in the history of the VIX, I believe it's it's settled below 10. I think it was 68 times, with close to 59 of those coming since January 1st of 2017. So again, the VIX the new trend in the VIX is lower and staying lower. So volatility looked like it could be an issue, doesn't look like it will be an issue. And ahead, we still have some key earnings coming up. Obviously, tomorrow and the rest of the week, we've got key names like American Express, we've got Morgan Stanley, we've got Netflix coming up. So there's going to be a lot to keep us busy doing some earnings watching. Likewise, we're going to have a few pieces of data, housing data we get, and then Friday we get the Michigan numbers, which, while the Michigan numbers aren't really key, it's the inflation expectations gauge that we look at, the 1 and 5 year expectations, and those are key just to give us a picture of where things might be. They've been running very, very low for quite some time, so any upticks we see there would certainly be welcome by the Fed and others, to be honest. If we can see a modest uptick in inflation, it might actually get the Fed to speed things up a little bit. That is something that we have not seen or expected. So right now, equities running high. Looks like tax reform and earnings are the drivers. Can it last through the weekend? Probably. I wouldn't want to get in front of this or fade this equity market, at least not now. It feels like a lot of this trade is also coming from capitulators who thought maybe the highs were in, and then there was going to be some negative news coming out of the earnings world. That is not the case, at least not today. This is Todd Colvin coming to you from the floor of the CME Group.